Hello friends. Today, let's look into Amara Raja Energy and Mobility Limited, one of India's top battery manufacturers, making batteries for cars, trucks, inverters, and now moving into electrical vehicle batteries too. Here is what their numbers tells us. Let's look at sales. 10 years ago, Amara Raja made 3,437 crores in sales. This year, that's grown to 12,624 crores. That is 11% growth every year on average over a decade. Solid and consistent. The last 5 years saw 13% yearly growth and a recent year grew 10%. What stands out is the steady upward climb with very few dips. Sales have grown almost every single year. This is steady growth, not the wild swings you see in cyclical businesses. Expenses grew from 2,876 crores to 11,038 crores this year. Material cost, lead, acid, plastic, make up about 63 to 70% of expenses. These can fluctuate with commodity prices but stay fairly stable. Manufacturing costs are steady at 4 to 5%. Employee costs are consistent at 5 to 6%. Other costs stay around 7 to 8%. Amara Raja keeps costs well controlled as they scale up operations. Operating profit climbed from 560 crores to 1585 crores now. The operating margin is 13%. So for every 100 rupees in sales, 13 rupees is left after direct cost. Margins have stayed steady between 12 to 18% over the years, showing consistent operational efficiency. Other income was 193 crores. This includes earnings from investments and treasury operations. It is a helpful bonus on top of battery operations. Interest costs are very low at 44 crores, reflecting minimal borrowing. Depreciation, the cost of machinery and plants wearing out is 503 crores annually, normal for a manufacturing business. If you observe the net profit grew from 367 crores 10 years ago to 913 crores this year. That is 8% annual growth over a decade. Slower than sales growth, but still positive. The recent years saw 12% profit jump, showing good operational leverage. Earnings per share rose from 21.51 rupees to 49.90 rupees this year, more than double, a nice reward for long-term shareholders. Return on equity is 12.3%. Return on capital employed is 16.8%, both solid for a manufacturing company. Dividend payout is 20% of profits, with a yield of 1.03%. Decent regular income for shareholders. So, growth for Amara Raja shows steady. Sales and profits climb consistently year after year without major volatility. The battery business benefits from steady demand for automotive replacement, backup power, and now the growing EV market, giving predictable long-term growth. So, overall, Amara Raja is a perfect example of steady, predictable growth in India's expanding battery market. Consistent sales growth, stable margins, growing profits, strong balance sheet with almost no debt, and regular dividends make it a reliable long-term performer. With the EV revolution just beginning, Amara Raja is well positioned to benefit from both traditional battery replacement demand and new age energy storage needs. If this breakdown was useful, subscribe to Wealth Growth Club and tell me which company you want next.